The key element is timely and accurate financial information to help the management team make informed business decisions. Now, it might seem natural for a business owner to work in different sectors of their business. Think about it. They generally start what they do because they're exceptional at what they do. It could be because they're an excellent architect, they could be an excellent builder, they could be an excellent hairdresser. And from there they evolve and grow into running the hairdresser, running the construction business, and being very good technically at what they do. You look at sales, you look at marketing. Marketing, you want to generate leads to get more people to buy your product or buy your service. Sales, you're looking to convert those leads into clients who utilize your service, buy your product. But what about finance? It doesn't come so naturally to people. They go, well, okay, what do I want to get from my finance team? And the problem is business owners don't often know what they need to get and how they need to get it. So we're going to go through that. Firstly, accurate information. You look at the financial reports that you're meant to be getting, and the key ones are your balance sheet, your profit and loss, and your cash flow. So they're all rear-facing financial reporting. So in terms of accuracy on your balance sheet's made up of three elements: assets, what you own; liabilities, what you owe; and then equity is the difference between those two. So ideally you have more assets than you do liabilities. Now, to ensure you have an accurate balance sheet, all the assets need to be real and verified, and all your liabilities need to be real and verified. And then as a result, your equity is accurate. So you need to make sure your finance team is providing that information that they can verify that the assets and liabilities are an accurate reflection of what you own and what you owe. Now, let's look at the P&L. The profit and loss statement is then the next side of things. Now, people instinctively want to look at the profit and loss because they go, oh, did I make money or did I lose money? But the reason that we led with the balance sheet is because if you've got accurate picture of your balance sheet, then your P&L then by virtue has to be accurate as a result of that. So your P&L is quite simply looking at your revenue minus your expenses. And if your revenue is greater than your expenses, you've got a profit, and the other way around, you've got a loss. Now, the key thing you need from your finance team in terms of your profit and loss is that if you've got your balance sheet right, as I said before, your P&L is going to be accurate as a result of that. But there's a little bit of a finesse element to that as well, which is making sure everything is allocated to the right account. Is the telephone bill going to the telephone account? Is the revenue going to the right account? Are wages going to the right account? All those different elements to make sure that you've got your P&L accurate. So that's step one, looking at the accuracy of your financial reporting. Those 5 key elements: assets, liabilities, equity on your balance sheet, and revenue and expenses on your P&L. Let's look at timeliness. So if I was to give you the newspaper from the 17th of July, 2020, is that going to be of any interest to you? Probably not, unless you know someone who was in the paper that day. It's probably not of much interest. What you want is a newspaper from this morning, and even newspapers are antiquated. You want to go online and get information telling me what's going on in the world today. Well, it's the same thing with your finance team. So timeliness is just as important as the accuracy element we just looked at. There's no point getting financial reporting, let's say for the end of June, in the middle of August. It's too late. That's 6-8 weeks after the actual month has occurred. You need information within weeks of the month being completed at the very worst. So timeliness is key. So you need to have your finance team working in a way that ensures they get accurate information to you, but also timely information. The biggest mistake we see business owners make is they don't know how to communicate that to the finance team, and they also can't verify it or don't feel confident verifying it. So you have to be firm in terms of expectations around accuracy and expectations around timing. Let's do timing first, because that is, to be honest, the easier of the two for you as a business owner. So the timeliness, you need to set a clear expectation around when you want to receive that information. So let's look at the steps of how we make that happen. The first item is they need to make sure all the data is entered. And the key elements with a finance team are these three things: making sure all your sales are entered, making sure all your creditors are entered, or your suppliers are entered, your payroll's reconciled, and your bank's reconciled. If you've done those elements, you almost by virtue will get accurate financial reporting. But when do you do it? Do you do it if it's the 30th of June when you want the reports? Do you do it on the 17th of July? No, you do it as the month goes on, so that by the time the 30th of June gets there, it's just another day. And then within a couple of days, you can close off and go, yep, my financial reporting is ready to go because all the data is in the system. So that's number one. The timeliness is really around what expectations you set around your team. So with people we work with, we've got clients who close off by the second business day of the month, and we've got some clients who close off by the 10th business day of the month. It really depends on the cycle of when you get information from your suppliers and also the resources you have within your finance team. Then we look at the accuracy. Now that's more challenging for a business owner because, as we spoke about, they're generally exceptional at what they do, but finance might not be their sweet spot to be in. So it's then asking questions of the accounts team and reviewing it and going, is this accurate? Is this right? Can you verify this for me? Does this make sense? Because your balance sheet is the story of your business. It's a legacy of your business. So you as a business owner should be able to understand all of those core elements. And we've got courses that look at understanding your balance sheet in a lot of detail. It's on you as a business owner to read those financial reports, and if anything doesn't make sense, you go straight to your accounts team and your finance team to get clarification. One, to give you confidence, and two, for your learning journey as well to understand financial information. So they're the core elements there. Timeliness, setting the expectations on your team, and accuracy, making sure that you're looking at a clear picture of your business's performance, not an inaccurate one. The third element is then using this information to make informed business decisions. And this is where you as a business owner and also what you have within the finance team really need to work together to achieve this outcome. So I'm going to assume that you as a business owner understand your financials, but also you're not necessarily a CFO or an accountant. So what you have to do is work with your finance team and share with them, look, what are the things I need to be aware of? What sticks out to you? What sort of feedback do you get from them in terms of areas for concern and opportunities to address? So there's a whole raft of education and a journey you can go on as a business owner to help you understand your financial information and translate that into actions and accountabilities within your business. But the only way you can do that with clear and concise understanding of where you're at, so accurate financial information, but also getting it in a time frame that you can move quickly and not realize that after the fact, hey, we're just about to go out of business, and it gives you no time to move in an absolute worst case scenario. They're the key elements: accurate information, timely information, and then using that to make informed business decisions. That is what you need from your finance team, and that's going to help you get the most from your investment in the people that you have doing your finances.